Let's speak to Sameet Chavan on the technicals of these stocks. Sameet, what's your thought on Infosys? I mean, this is a 25% crack. This is, these are way beyond retracement. I see the same phenomenon in Sun Pharma. I see the same phenomenon in many of the pharmaceutical stocks. What are your thoughts? Should you really be chasing stocks which have lost their trend?
Good morning. I don't think so. If we look at the overall Nifty IT price movement since last 2-3 months, it has been clearly underperforming. If you look at the daily, weekly charts, the index has already broken its major support levels for Nifty IT. 10,000, 10,100 was a very good psychological support level. So it has convincingly broken that particular level. So, as of now, these stocks are like a falling knife. So I don't think so. We should be cashing these stocks every day. These stocks are falling more than 3, 4, 5%. So I think there's further downside left in the overall IT space. As far as Infosys is concerned, 1,000 was a very good major support level. It was a psychological support. The stock has already convincingly broken that particular level. So we expect Infosys to continue this downward momentum at least towards 940, 930, which would be seen as a multi-year support level.
Right, and Sameet, I'm with you on intrinsic value with some of these stocks. The issue is not whether whether prices look attractive to intrinsic value. Maybe they do. The question really is whether the prices can drift further lower and become further attractive. And I wanted to take the case of Sun Pharmaceuticals. If you bought Sun Pharmaceutical on April 2015, that's almost 18 months. It costed you $1,200. You've essentially lost close to 50%. And then if you bought it on January 1st, you've lost about 25%. So, once again, as an institutional investor, I just can't continuously be badgered by stocks that continuously fall. So what do I do with pharmaceuticals then?
You said is a very correct thing that, the stocks are down a large amount, and especially Sun Pharma from its 52-week high is down almost about 50%. But what you got to realize is it was a herd mentality 2 years ago where anything and everything in the pharma space at whatever valuation to people seemed like an attractive buy. Whether it be Lupin trading at 2,000 plus, whether it be Sun Pharma about 1,000, whether it was Dr. Reddy's at 4,500, anything in that pharma basket, whether it was trading at 40 times earnings, was something that people wanted. That same situation can happen in other sectors. For example, the auto sector right now, there's a huge run-up that's happened in the auto space. You have Force Motors, you have your Atul, you have Maruti which is running. You have a lot of these counters which have run up. Escorts has run up a lot. But at some point, the valuations become unsustainable, and then they have to correct. And then once the consolidation happens in those sectors, then they move up. So I feel in the pharma space, we've reached that point where a lot of the over-exuberance that was there is now out of the system. Valuations are more reasonable. Today's fall in the pharma space has something to do with certain litigations that they may face in the U.S. There's some news going around that the U.S. authorities have said that there's some price collusion. If that were to be the case, that has been one of the reasons. Now, just let's take simple valuations. If we were to look at it for all these pharma companies, including Sun Pharma and including Lupin, they're trading at, the earnings have not really decelerated or decreased significantly over the last year or the last 2 years. They've remained constant to slight increases. These earnings may continue to increase, of course, barring something like a Donald Trump coming in and saying that, look, we are not going to take further imports of medicines from India. If that is not to happen, these pharma companies still have a huge opportunity in the U.S., which they will be able to tap. Earnings will grow, and then people will say, look, you have a sector here which is growing at a relatively decent pace. Valuations are not as expensive. These are cash-rich companies are spitting out huge amounts of cash. Return on capital is extremely attractive. So yes, I would be buying into some of these pharma names, especially companies like Sun Pharma, Lupin. Dr. Reddy's is an interesting play. Cipla, if it corrects a little further, is a very, very interesting play. So I'm not going to shy away from something just because it's right now down. I think it'll take another 6 months, maybe, but once that 6 month period is done, these stocks will again outperform. And to sell for a mutual fund industry, for these fund managers who've studied these companies as well as they have, they probably weren't buying it at 1100. They probably bought it much before that. So what's happened is, yes, they're losing, but they're losing part of their profitability. They've not lost the money on that trade. And I feel they will add at these points, and you will see these companies doing better.
Right. Sameet, just briefly, I wanted your thoughts on the Tata companies. It's one thing, I'm just wondering if the market's overdone selling in Tata stocks, because Mr. Mistri's family concern may own 16% in a private limited company or a private company called Tata Sons, but they don't own shares in Tata Motors or Tata Steel or Tata Power or wherever else, Indian Hotels, where he's a director. The fact of the matter is that he neither has 10% shareholding in these companies, nor 1/10 of the shareholders support him that he can move the National Company Law Tribunal and say, nobody can remove me as a director. In fact, his petition will be non-maintainable. It seems like it's a losing battle, and the Tatas are pretty much going to go on the way they're going on at the moment.
You're right. He doesn't have any stake in any of these companies independently. But what you also got to realize is, eventually it's the boards that have taken certain decisions at the company level, and at the company level, a couple of the board members have also come out in support of Mr. Cyrus Mistry. So it's something it's difficult to project whether he'll be able to stay in power, whether he'll not. It's a boardroom tussle which we don't have a say. All we can say is that Tata Sons does not have a controlling stake in most of these companies. They are under 40%. So for them to be able to try to force their view may not be as easy. It will have to come from within the board of each of these companies now. Whether they want to remove Cyrus Mistry as a chairman, whether they want him on the board. So that's something I will not be able to judge sitting here. Now, coming to the point where you're asking me, has the selling been overdone in some stocks? Probably yes. The selling for Tata Motors has been overdone, because of the specific points that Cyrus Mistry made towards Tata Motors, with the Nano project being a loss-making entity and being kept open only because of emotional reasons. So that has spooked a bit of the investment sentiment. But that is something that I think the Tata Group by itself will figure out what they need to do about. What we got to look at is the larger picture. Jaguar Land Rover for Tata Motors is the most profitable part of the business, and that continues to do well. So we really need to look at valuation here and forget the boardroom battle. That will end 6 months or 1 year down the line. The boardroom battle will be history, and people will be focusing on numbers. And for me, Tata Motors is one of those stocks where there is still a lot of value, where the growth opportunities are quite strong for the international market of Jaguar Land Rover, for the domestic commercial vehicle segment, and the domestic PV segment, the personal vehicle segment. So I think Tata Motors is attractively priced. Tata Steel is something I would still like to say that maybe the selling has not been much and could further increase, because right now, steel sector is a hot sector in demand. But what needs to be seen is if Tata Steel does have to take a few more write-offs, then will raising funds for them, raising further debt, come at a higher level, which could dampen profitability.
Right.
So that's something I would stay away. And the rest of the companies, TCS and all, are going through the tech sector correction, or you have Indian Hotels. So those are something which have corrected, but I think there may be a little value in Tata Motors, Tata Global Beverages, and maybe Indian Hotels.
All right. Sameet, let's just take a couple of other stocks. I wanted to start with ITC. Just as a chart pattern, there's not much there. Also, I wanted to take one or two stocks where you seem to start having a breakout. One is Mahindra and Mahindra. We seem like there is a breakout coming through in that one. So your thoughts on ITC purely on a technical basis, and two on Mahindra and Mahindra.
As far as ITC is concerned, if we look at the weekly, monthly chart, the trend has been positive since last 4 to 5 months. It's been maintaining its high top higher bottom formation. And the recent correction in the stock from the levels of 265 can be interpreted as a pullback towards its important support of 235. So today, on an intraday basis at least, we are witnessing a breakout from its near-term hurdle of 246. So, if we look at the overall trend, the trend has been positive for ITC, and we expect the stock to outperform. It may not surge as such, but we expect the stock to gradually move towards its near-term resistance of 262, 264. So we would trade with a positive bias, though we have a negative stance on the benchmark index. This stock is likely to outperform. As far as M&M is concerned, as a disclosure, last week we had recommended this stock around 1300. We expect 1500, 1520 levels in probably next 3 months. This is not a near-term view. Probably with a medium-term view, we expect the stock to outperform. 1290, 1300 has become a very strong base, and in such kind of market, this stock is clearly bucking the trend. So we expect this stock to outperform a bit. 1450 would be a near-term hurdle to watch out for. But if you have a 2 to 3 months view, this stock is heading towards 1500, 1510.
Right. Sameet, let me ask you a broader question. The thing is that even when you are trading, whether you're day trading or trading, you have to look at the overall scenario. And especially if you are in the futures market, you just can't keep buying if the overall market looks under pressure. Now, Sameet, if we were above 8500, it was fine. The fact is that we have drifted below 8500 and the next support levels are far away. Is it a good idea just to close your positions, especially if you're trading on margin? Because we don't know if the index is drifting to 8300, and you can always come back if we have an uptick.
Definitely. It's not today. We have been maintaining our cautious bias on the market since 8750, 8800, since the time we have witnessed the shooting star pattern on weekly chart. So 8500 was acting as a very strong support for the market. Yesterday we got a convincing close below 8500, and we are not expecting a fall towards 8300. In fact, we expect a fall towards 8150, 8200, which is the 38% retracement of the entire up move from 6800 to 9000. So yes, especially in mid-cap counters which are falling drastically, it's better to close out your positions. And market is heading for a further correction. So it's better to close out your positions and wait for further developments.
Right. Sameet, now what do you think happens to some of the mid-cap stocks? Because there you don't even have diversity of traders or investors, and prices have gone one way. And in some stocks, they've almost doubled, tripled one way. If the index was to drift, do you think the mid-caps will be able to hold up?
So the mid-caps had started trading at valuation premiums to the larger cap. And usually whenever that happens, it's a cautionary kind of situation. So I do think that, some of the mid-caps that had shot up way beyond reason, just because of pure sentiment that, I'm getting the fear of missing out and I won't get the stock, I think these stocks will correct just as fast. And that's exactly what I've been saying, that, it's the herd mentality. When a sector or a particular few stocks are doing well, everyone wants to be part of it. Everyone wants to chase it. And then eventually what happens is, it's the greater fool theory. The person who bought it probably at the highest point has to hold on for 2-3 years before he actually gets his price back or even makes some money. So I still think a lot of the mid-caps, a lot of them are still trading at huge premiums to the market. And there is some money that can be taken off those spaces. I think you have some of your large caps which are trading at much more reasonable valuations, stronger fundamentals, lower debt, better returns ratios, which can give you a steady return. It may not give you the exponential return that everyone wants in the in the equity markets, that my money should double every 6 months, but at least you'll be in a good stock. So yes, I do believe mid caps will underperform over the next maybe 2-3 months. Then we got to review the situation again. There'll be 2 events out of the way by then. You'll have, of course, by next week the presidential, and then by December you'll know what the outcome of the Fed meeting is. So if those 2 major events don't go to negative, maybe the mid caps can start outperforming again. But if one of those 2 do go wrong, mid caps will really underperform.
Right. Sameet, just the same question for you, and I just wanted to bring up the mid-cap chart first. One of the reasons I'm not focusing on specific stocks today in this market movers is because we have to look at the overall picture, and the overall picture is slightly dangerous at the moment. At the moment, it's not necessary, and this is from a trading perspective. Now look at the mid-cap index. Look at how sharply it's readjusted itself. So where does it stop? Who knows? Who knows? I mean, it'll have to form a new support, or if you look at a long-term support, that is at 9,300. You have a small cap index, if I can take a look at that one. and we'll see a similar phenomenon there. So Sameet, Chavan, the questions for you. You know, the adjustment in the small and mid-cap index has been very sharp and swift, but they've also risen almost 30 to 40% in the last few months. How significant, or where should we look for supports on the mid-cap and the small-cap index?
Yeah, you rightly pointed out, most of the mid-cap counters have shot up in last 2-3 months and they have given exponential returns. But we have been closely tracking Nifty mid-cap index since last 4-5 weeks, and we have been observing this index struggling around 4150, 4100, which was the 78% price exchange of the previous up move. In last 3 days, we have seen a sharp fall, and we expect this fall to continue. At present, it's trading around 3900, but we expect Nifty mid-cap index to slide towards 3700, or it could slide even towards 3620, 3600, which are the major support levels.
Right. So we'll take a look at some stocks which have actually held up very well. One of those stocks is Raymond. We've also had similar trends. So if you look at tech, actually they've done very well. Vardhman, Polytex. I'm just taking a few, not necessarily that may have run today, and also Arvind. So there are pockets where we are doing fine. Gati. We are a logistics up today, but it doesn't really have much of a trend. So Sameet, Chavan, your thoughts on Raymond, Arvind, Vardhman, Polytex, all very, very solid charts. If that momentum can continue, because we have not seen much of an adjustment even in the fall from them.
Yes, these stocks have been outperforming in the recent past. They have not fallen since last 2-3 days. But looking at the overall mid-cap and small cap index, we would rather wait for a dip to happen, though they have a very strong chart structure on weekly as well as monthly time frame. As far as Raymond is concerned, we would wait for a decent dip. 595 is the near-term support, but if we have a 2-3-4 months time horizon in Raymond, then probably we'll wait for a decent dip towards 570, 560, which is the retracement of the recent sharp up move. So as far as Raymond is concerned, we would wait for a dip. If we have to get into the stocks, then 570, 560 probably would be seen as a very good buying opportunity.
Right. And Sameer, Raja, maybe we have time for just one or two more thoughts. I wanted to ask you, what do you see next happening in Dr. Reddy's or Sun Pharma or Glenmark or Dishman? Because one of the things, Sameer, I've noticed is that you know, many of these companies, there was a lot of excitement at one point. They were coming up with new molecules, new Para 4 filings. They were getting big milestone payments. I've not seen any of that happening almost in the last 2 to 3 years, whether it's Sun Pharma, Glenmark, Dr. Reddy. It's almost like they've turned into your commoditized generic companies.
So the existing business, what they're doing is generic business. In fact, even the Para 4s that they're filing is a generic version of the original drug, right? So that has been the business model. What you're rightfully identifying is that the discussion is no more happening on the fact that fresh Para 4 approvals are coming through. Aurobindo has been getting a few, but barring that, I mean, you know, it's been quite a lull, and it's been more of the generic kind of business. That can also change rather fast. Right now, I think the problem with Dr. Reddy's has been the fact that they've had the US FDA inspection, which showed some data integrity issues. Until they get maybe that resolves, some approvals may take some little longer period to come. Sun Pharma also had a bit of a US FDA concern at the Halol plant, again, which could mean that, you know, certain delays. So these delays are there. The pharma sector is going through, or has been going through for the last 1 year, through a slightly difficult patch thanks to the US FDA inspections and, you know, the tightening up of the regulatory requirement for the Indian companies. I think we are closer to the end of that now. These companies will get their approval soon, and once the approvals come and they start launching these Para 4s, I mean, if you just look at the number of Para 4 filings that are there from Dr. Reddy's or from Sun Pharma or from for Cipla or for even Aurobindo, they're quite large. The market sizes of these drugs are very large. I agree they will become smaller once the generics launch, but the profitability for these companies will be amazing. and I think the pharma space will entirely bounce back. So you're getting these stocks, like I said, at attractive valuations, and I don't see any harm. Yes, it may take another 6 months, but if you have a 1.5 year horizon, I think pharma will give you a 20+ return over a period of 1.5 years compounded.
All right. Sameer, you talked about the valuations of some of these stocks. The other issue, I mean, we've been talking about Tata's. I don't remember the last time I've even heard from some of the managements of these companies. So just in terms of, how much disclosure we have from these pharmaceutical companies, let's say, compared to IT companies, it's a big gap. They only seem to speak when they make an acquisition or something. But other than that, I really have no idea what many of these guys are up to.
Pharma companies are actually quite investor-friendly, actually. It's been quite relatively easy to get information from most of them regarding what they're planning, what their plans are. So I'm just worried on the investor relations side. What we do not know sometimes is what are the drugs that they're filing for in the para for, by when they will get approval. So those are the issues, but I guess that is something that they themselves cannot divulge the information, so they're not. IT companies don't have as much restriction on what they're doing, so they've probably been more open. But I'm not too worried about the limited information flow that is coming from the pharma industry. I think there's ample flow of that. Again, like I said, I'm not too worried on the pharma space. It sounds like a broken record while I'm speaking right now, but I still believe pharma is the space to probably start accumulating now over the next 6 months.
Sameer, always a pleasure to speak to you. Thanks very much for joining us. That was Sameer Dalal of Natwaral & Sons. And Sameet Chavan, thanks very much for taking the time to walk us through the technicals. I tried to keep the discussion more on the broader indices because, we are at that point where we can go to the next level on the hill or may slip down the cliff. So at that point, trying to pick up a few stones or a few stocks is not going to do it. So maybe we'll leave it at that. Thanks very much for taking the time to be with us on Market Movers, and of course, that whole discussion about the pharmaceutical stocks. We'll be speaking to Surajit Pal of Prabhudas Leeladhar. That will be coming up on Corporate Eye on what exactly is happening in the pharmaceutical sector. From everyone here that makes Market Movers possible, thanks for making us a part of your lives. Goodbye.